Mukul Kochhar also joins us, Head of Institutional Sales with Investec Capital Services. Mukul, good morning. Thank you for joining us. Telecom, is it time to buy Bharti Idea? Because you think if these problems are sorted out, then some would argue that there could be a moment of re-rating both for Idea and Bharti.
So yeah, for sure, the sector is looking more interesting than before. Consolidation is one theme that we've been speaking about across sectors in India, and telecom is one of the bigger beneficiaries from that. So definitely the sector is looking better than before. The one caveat I'd probably give here is that we don't cover the sector. So I'd refrain from giving a stock-specific call, but the sector definitely is looking for higher profits ahead.
Okay, that's in fact the Birla Group exposure to Vodafone Idea that Nikunj was referring to, and the group companies, the kind of exposure that they do have as well. Nikunj, it doesn't seem that collectively the exposure at least is as high as we were expecting.
No, I mean, that's why we think that, okay, it's going to be a problem for Aditya Birla Group. It's not going to be a problem for Aditya Birla Group. Why? Because their exposure to, or the ownership in Idea Vodafone is only 26% here. One. Second, now you may argue back and say, okay, if they file for bankruptcy or NCLT, in this case, what happens to other group companies and what happens to their debt which they have taken? Because mind you, Birla Group is a old economy stroke, a commodity heavy group where they do have a large bank exposure in Hindalco, Grasim, other companies. So what happens there? And then what happens to their NBFC business, where if there is a case of a bankruptcy and if the cost of capital of the coupon at which they are raising capital, if that could go higher. So Mukul, part one is telecom, part two, what it means for Birla Group of companies. Somewhere there is nervousness in the market. A stock of Grasim, a stock of Aditya Birla Capital or Aditya Birla Financials, they've been underperforming because if Idea goes belly up, it could have a rub-off effect on other group companies. Do you agree with this view which some market men currently are expressing?
No, absolutely. I think your argument is on the ball here. I think the implications for unruly bankruptcy out here are quite severe. I think they're severe for the group, they're severe for the economy as well. So base case should be that this gets avoided. If you just follow the story, what has happened so far, the group was actually asking for restructuring of the payments. And that can be achieved through other objectives as well, even if though the Supreme Court has mandated that the DOT gets paid right away. The restructuring of payments can be obtained through the banks. It can be obtained through some other solutions that the market was proposing yesterday. So there's a way out, and yes, of course, I mean, if there's a bankruptcy, then the Aditya Birla Group gets impacted. There's an economy-wide impact as well. So I think all parties will work to avoid such a situation.
Hemang, prospects of any of these railway stocks looking up? I mean, there's only one case in point here, IRCTC. That's up a solid 96% since listing. Merit in looking at it, or do you think the best is already behind us?
Well, it's been a stellar, IPO debut, and even post IPO, we've seen a very strong up move. I think primarily driven by the kind of increase that has been proposed for the service charge. And the fact that the volume growth or the growth in the passenger traffic may not be that great, but overall because we don't have too many stocks with such a niche segment which is growing, which has its own story, so people are kind of lining up to buy that. We do like that particular space, but till we get much of clarity in terms of what kind of really growth one can look at over the next couple of years, given that it has already run up so much, at some point, yes, we would definitely want to look at it, but at the moment it's not part of our coverage list.
Sure. Okay. Let's Mukul, we've been talking about Pharma as well, and now there's been so much action. Aurobindo, of course, is the star. We had the deal buzz in Dr. Reddy's. We've had some of those mid caps also seeing some fair action. So where within the Pharma pack are you looking right now?
So we got a few, buy calls in pharma. It's Ipca, Torrent are some amongst the mid-cap space, large cap space. While we've had a negative call on Sun for a while, that has started looking interesting, especially given the kind of investments they've been making in innovation. If even one of this bet works out for them, the stock could actually see substantial gains from here. So the sector is very stock specific, and we are laying our bets on some of these guys. Definitely, I'd just like to add one more thing. If I do a bottom up, build a portfolio in India, you realize that these are some very high quality, good free cash flow companies, and the sector has been under pressure for some time. So just as a sector that you would bet on normalization, there's got to be some sort of stocks that you pick in your portfolio when you're building a more diversified Indian portfolio. And some of the bets that we laid out, Cipla as well is looking interesting. Let me mention that.
Sure. Hemang, I don't know how closely you've been tracking Federal Bank, but a Morgan Stanley note coming out this morning wherein they've raised the price target now to 95 bucks. They're saying it's inexpensive valuation. They're saying that they expect a gradual ROE recovery given the low coverage, lack of high margin growth engine, but they have managed to raise the price target. Do you also believe that the prospects of Federal Bank are looking up, or do you think one is safest to stick by with Max and SBI, and of course the erstwhile favorites, HDFC Bank, ICICI Bank, etc.?
See, Aisha, there can be a case for some kind of a pop in the smaller banks, given that the bond market yields have continued to remain much lower, and given the LTRO that the RBI has, come up with. But we have to also understand that the longer term story, let's say about 6 months, 12 months kind of a story, is not looking great for these banks, because one is really not sure about the incremental slippages that one can really expect over the next couple of quarters. So yes, in terms of the valuations, etc., all these banks will continue to look good, but people would always look at things with some sort of a suspicion about asset quality, etc. So yes, from a tactical, let's say another 5-10% kind of a pop point of view, it might be great, but I'm not too comfortable holding on to smaller banks at this point of time, given the overall economic scenario that we are in.
All right, Hemang, thanks for joining us this morning. Let's kickstart with those pre-open trades on your screen. Steady start so far, as we can see it. Mukul, just to get a sense from you, we've got the larger part of the market that's pretty confident of this up move. You're considering also the kind of flows that we're seeing and the liquidity-driven rally that we're seeing. But there is a segment that considers a possible slump or correction coming in at some point. Even if we do see a correction, how much do you feel is warranted? Would it just be a moderate correction, to smoothen out those valuations, or do you actually see any risk of anything else?
Yeah, so just to start with, corrections are very, very common, right? I mean, while we always worry about them from a rally, and these worries are very fair, because honestly they happen all the time. The issue is that it's very tough to predict when they will happen. I mean, you can, as a safe bet, you can say I'll buy a good company which is available at a good valuation, and if it corrects for whatever reason, I'll add more. So I'll probably sort of not want to predict whether you're due for one right now. The only thing I'll probably mention is, there is when we speak to investors, there's a disconnect between what the market is doing and what the economy is doing, and that we think is sort of justified, because if you look at the profit pool of companies, the profit pool of the company has never been, it's at a decadal high. We did an exercise where we calculated the return on invested capital of BSE 500 companies and compared it to the risk-free rate. The gap between the return on capital and the risk-free rate, which can be a proxy for economic value add, this is actually honestly at a decadal high, and which explains why stocks are going in one direction even though the economy is not kicking right now. So I can justify where the stock's right now. Whether we get a correction, not too sure. But I'm comfortable stock picking in this environment, building a portfolio that we think is justified.
Mukul, purely from a trade and business aspect, what do you think could be the synergies that could come out of Trump's visit to India?
It's US is the largest economy in the world. It's also a significant trading partner for us. We enjoy trade surplus with them. So being on good trade terms with the US has helped every country in the world. India is no exception. Getting a good trade outcome from any discussion is a positive for India. But what I'm hearing, what we're reading in papers, honestly, nothing more than that, is that there's no plan for getting a trade outcome, at least in this round. But I think over the next year, if we can if we can come to a good understanding on trade with them, it's only a positive for India. I think what one is hearing is that it's not really likely in this particular trip.
Okay, what's your view on cement currently, Mukul? We've seen Grasim see some amount of price action. Shree Cement we've been talking about. Ambuja's going to report numbers today. Within the cement pack, what's looking good, or as a segment?
So as I mentioned before, one of the key themes that we've been playing in India for the last year and continue to back into this year as well is consolidation, and that is the core reason. And there are very structural reasons why industries are consolidating. IBC and RBI's action on AQR being key, where debt capital which was indiscriminate is now more scarce, and it's actually going to deserving companies, which has meant that all the industries have seen competition from new entrants and smaller companies wither away, meaning the larger companies benefit. Cement is a key beneficiary cement industry is a key beneficiary from this trend. The largest player now, UltraTech, controls roughly 20% of overall capacity through organic and inorganic routes. This has meant the sector actually is behaving overall with better discipline than in a long time. For instance, just take the example of last year, where volume growth was a pittance. It was just 3%, but the industry managed to retain pricing throughout the country, not just in the south, which is where traditionally we've had more pricing discipline, but companies reported like 30% plus EBITDA growth despite volume growth being very tepid, and that's just a sign that the industry is getting better. Now, despite the fact that you've had good profit growth last year, the leader of the pack, UltraTech, just makes 7.5% return on capital, which means that the incentive for more price rationalization is fairly high in the industry. We're fairly positive on the sector, you would have guessed by my comments here. And Ambuja Cement, which we just spoke about as they report today, is looking very, very, the valuation is fairly good there, and then would be a fair bet into the year.
We'll let you go on that note. Thanks as always for joining in. But